Hey, Dan Passarelli here. Happy birthday, America. Guess what you get for your birthday? A new all-time high in your stock market. Just like yesterday and 3 days ago and the day before that and the day before that. We've been seeing a lot of those lately. This has been one of the strongest 3-month runs that I've ever seen. But, let's talk about that for a second. Part of that is because we had such a massive amount of panic here in the beginning of April, leading to a strongly oversold scenario, as you can see here on the RSI at the bottom of the screen. Then once it crossed back above the 30 line, we've got the follow through that we typically see when it crosses back above those lines. Now, it doesn't always keep going for 3 months like it did. Sometimes it's a much shorter period of time, but here it did. Where are we now, and where do we go going forward? Well, look, there's no resistance to keep us lower. And like I said, if this bill goes through, all the massive amount of money that's going to be hemorrhaged on our society is probably going to heat up our economy. And if we keep making some of these deals, if they go through and the exuberance of, hey, we got another deal keeps going forward, that can keep pushing the market higher. That's the case for the bulls. The case for the bears, well, we got a gap here that formed yesterday. We got a gap here. We got a couple other gaps. But let's talk about RSI. Here we are in solidly overbought territory. And if it turns south and crosses below the 70 line, we would expect some follow through. Maybe not a lot. We'll see. What are the fundamentals, though? That's kind of what really ends up mattering in the long run. How do fundamentalists value stock markets? They look at the price of a stock or a basket of stocks like the S&P 500 and compares that as a multiple to what its earnings over the past 4 quarters or the trailing 12 months is. I just happen to have a chart of that right here. This is from multpl.com, multiple.com. And this is a chart of the last 50 years of the PE ratio of the S&P 500. We sit right now at 29.68 times the past 12 months earnings. Now, a couple things here. You look down here, the mean is 16.15, median 15.05. All right, that's a little bit relevant there. But you look at this and you say, Dan, look, it's been higher here and here and here and here. It's not that high. There's been many other times that it's been higher. Well, what were those times? Well, this time was COVID, when the price of stocks got smashed. Didn't change the last 12 months earnings. You can't change the past, but the price fell massively. This was a crash. What was this right here? Oh, this is the 2008, 2009 financial disaster, right? Mortgages and all that. This was another crash. What's this right here? Oh, 2001? Oh, what was that? That was the dot-com bubble bursting, another crash. The Qs lost 50% of their value. Right here, what's this? Back in 99? Oh, long-term capital and the Russian, when Russia defaulted on its debt. Another market crash, another financial disaster. This is the highest PE ratio that we've seen when there wasn't a crash in the last 50 years. What does that mean? I don't know what that means. It means what it means. It means that the level of stocks are priced very high. Now, you can spin that in your mind, and maybe even rightfully so, that, Dan, it's the PE ratio. Even if the P doesn't go down, if the E, the earnings get better, well, that makes that number smaller, right? Because P divided by E. If E is a bigger number, it makes the PE lower, right? So maybe that could come into play. They're just pricing in much, much, much bigger future earnings than we've seen over the last year. Well, they would have to be much, much, much bigger in order to sustain this level of pricing. Doesn't mean it can't happen. We had irrational exuberance. The market can remain irrational longer than you can remain solvent, as they say. So I wouldn't necessarily be betting strongly against it. I wouldn't be doing that. But I would be being cautious. And I'd be watching it, and I would be following all the things we talked about in recent videos, as well as this precautionary version of it, and trading accordingly. I hope that helps. This is Dan Passarelli. Have a great day off, great holiday, and I will see you next week. Trade smart.